Well, we got it, you guys. The fabled pullback. They said it would never happen, only up from here. But if you follow this channel, I'm sure you know better. We've been looking for a pullback for about 2 weeks now, and we've been talking about the 200 DMA on the S&P 500 being that first key support. Well, we got just that pullback and just that support today on some fresh tariff saber rattling from Trump. We've also been saying that given the market structure we've seen, dips will be for buying, and we also saw that kick in with a strong bounce away from that 200 DMA support, moving right up to close the overnight gap fill. So, is this the extent of the correction? Well, the last hour of the day unfortunately saw some selling, which tells me that the pros don't quite think so. With all the persisting US debt concerns, the bond market still on edge, and no clear settlement on tariffs, I would still bet on more volatility ahead. And amidst all that uncertainty, Bitcoin was printing one all-time high after another after another. I stopped counting how many there were this week, but we've got plenty of charts to look at, a few new opportunities that came up. So join me as we recap the macro and look at the key charts for swing trading stocks, commodities, and crypto. Let's go. This isn't financial advice. Past results are not indicative of future performance. Do your own research. Welcome back to the Trading Apologist. My name is Tom, and I hope you all had a lovely week. It's Friday, so let's have a little fun. No, I'm over 40. This is just kombucha, and I want to go for a run after this. If I were to have a beer, I don't know about you, but I feel like I got shot with Bear Tranquilizer, so we're going to drink the kombucha and carry on. Before we dive in, if you do find value in the content, please like, comment, or subscribe below. It really does help the channel out and helps us get out there to more people. And if you do have questions as we're going through the chart, please leave those down below. I do go through and I answer every one of them for you. Today, I'm going to do a quick recap of the top stories that are impacting the macro, and then I'm going to spend a bit more time in the charts than normal because it's been a full week with a couple trades breaking down, some new opportunities popping up, and then that MicroStrategy Tesla Pair Trade that we discussed on Monday has been a bit tricky on the swap, and a lot of questions have been coming up, so I want to dive back into that to give you guys the latest updates. On that note, since there's so many timely things happening every week with trades, I am posting live updates on X. So an example from this week is that the daily RSI on Deckers, a trade we've been following here, broke down. And the chart didn't quite hit our price target. It was already looking weak and earnings was coming up. So when that daily RSI broke, I sold out, posted that on X, and the next day on earnings, the stock dropped 25%. Now, I wasn't expecting that because earnings were positive, but they couldn't give good forward guidance. Anyway, that's more than we need to talk about here. But that's just an example of if you want to be tracking those trades we're talking about and get those real-time updates, you can follow me there. Now, to round out the macro, if you're wondering why the market opened sharply lower today, well, President Trump announced new 25% tariffs on all smartphones manufactured outside the US. And this includes Apple's India-made iPhones and Samsung devices, along with a new proposed 50% tariff on European Union imports. All of this would start on June 1st, so apparently the EU isn't playing nice in negotiations and some ground need to be made up. These announcements led to a 1.3% sell-off in the S&P 500 amidst the raised concerns of inflation and more global trade tensions. The drop we saw today was stacked on top of an almost 2% drop in the S&P 500 on Wednesday as investors reacted to a weak 20-year bond auction. This is amidst a general backdrop of rising national debt levels and the broader bond market instability. Also, the Big Beautiful Bill Act, which sounds a bit more like a fetish category than actual legislation, but maybe it's both. I don't know. I'm not here to judge. It passed the House this week, and it's also expected to increase the U.S. deficit, which contributed to that market volatility. I did a full breakdown of the tax bill on my X, so there's one more shameless plug to check me out there. Amidst all that, Bitcoin and especially the Bitcoin proxies were pumping most of the week, with Bitcoin hitting one all-time high after another. Oh my God, it did not stop. But the US-based Bitcoin ETF saw massive inflows, purchased around 18,644 Bitcoin this week, which easily outpaced the miner production, which was around 3,150 Bitcoin. So I'm no math whiz, but one of those numbers is greater than the other. You'll figure it out. On the I don't trust this side of the news, leading US banks like JP Morgan and Bank of America are in early talks to develop a joint stablecoin. It's aimed to streamline transactions and also help them compete with existing crypto payment systems. To do this, they really need the Genius Act to pass, which seeks to regulate stablecoin issuance. Now, I do want to see clear stablecoin regulation, but personally, these bank-issued stablecoins just feel 1 degree removed from a full-on CBDC. So, just like when Paris Hilton put out her first record, no thank you. God, that joke works on so many levels. Like, you don't want to touch either one, and they both get paid way too much for doing nothing. In our last bit of news, President Trump had his crypto dinner last night with notable figures like crypto billionaire Justin Sun in attendance. Critics of the event called it a, quote, orgy of corruption. I'll try anything once. But at the event, Trump once again expressed his support for the Bitcoin Act, a proposal for the US government to purchase 1 million Bitcoin as part of a strategic reserve. The funny thing is that the crypto market was rallying and cooled after the event last night. And it's just odd how after things like this or a Bitcoin conference, which is happening next week in Las Vegas, they can sometimes mark a local top in the crypto market. So not saying it's going to happen, but keep your eyes on that. So let's get into the charts. And I'm going to start with going over the MicroStrategy Tesla Pair Trade, since that's been on everybody's mind and I've been getting so many questions. If you missed the full breakdown in Monday's video, go check that out. I also broke out the pair trading demo and the Bitcoin breakout identification lesson into 2 standalone videos. You can find that and a lot more in the trading education playlist on this channel. Okay, we're starting here on the MicroStrategy Tesla Pair Trade chart. Just to recap, the ticker is MSTR divided by TSLA, so one asset divided by the other. And the asset that's first, MicroStrategy, is what you want to hold in the uptrends, and Tesla is what you want to hold in the downtrends. And we're picking assets that are inversely correlated. So when one is dropping, the other is rising, and we're flipping back and forth to grow our bags of each. But if you want the full recap again, watch the video on Monday. Now, what happened was on Monday, we were right here. And it looked like a pretty clear sign after all these buy signals and the trend flip, mean reversion, and RSI being bottomed out to switch into MicroStrategy. And then we got into this very uncertain trend around 1.2 that was just chopping back and forth and was very indecisive. And also, if we're looking at the macro backdrop, that led to that uncertainty. Everybody thought, well, surely MicroStrategy would keep rallying, especially with the Bitcoin prices going up. Tesla looked like it was into some resistance. It all made sense, but the charts couldn't account for this. But there's a class action lawsuit against MicroStrategy. Michael Saylor is hitting the ATM, so that was suppressing price. And I think that's why we were seeing this sideways chop. And normally you can see these trend flips are much more clear. Like, yes, you get a little fake out here, but we can use our read of RSI not going below this 38 level here to tell us that that's not a full flip. And here we were just kind of all over the board. And you can see these other clear trends here. The best thing I can compare it to in recent memory is maybe a condensed version of some of this fake out here. So if you got into that trade, my recommendation would be to perhaps not try to chase it and flip now into Tesla, because this is getting into levels where we find historic support. So let me just go full screen here. And if we really compress this, I have an alert here at 1.05 to 1.06, and you see that's been a lot of historic support in this zone down to 1.03. So my gut would say that sometime next week, this trend will meaningfully flip in the favor of MicroStrategy. And if you haven't swapped back, you can continue to ride that up. MicroStrategy has a lot of support right now between the $343 level to where it closed out today at like $370. And then Tesla could still move up to that $360 to $367 range, but that's what could push us down into this range here and then have the trend continue up, because MicroStrategy is into that resistance. And I'll look more into that support and resistance and daily RSI once we get into the charts. The thing I did was I flipped here, and then as the trend was uncertain, as we got this more meaningful trend change here, I flipped 50% of my MicroStrategy back into Tesla just as a little bit of a hedge, and I'm still pretty 50-50 right now. I could have done more, but I was just trying to protect some of that downside or against some of that uncertainty. And one thing I wanted to go over that I didn't cover on Monday that might be a bit helpful is how I'm using RSI as a bit of confirmation on these trend changes. So I've got a line marked here at 60 and another line marked here at, let's call it 38. And you can see as these trend changes happen, we get through this middle range pretty quickly. And when the meaningful move happens, you look at the top of the chart here, it's usually happening above 60. Or on the flip side, you can see as our trend changes and we drop down, the meaningful price action happens below 38 on the RSI, and that's that steep drop. So the reason I trusted this flip was because we broke above this and we broke above the 60. So as soon as I saw that and I saw the trend change, it's like, okay, rest of my bag. And then when we faked back out, we got support at that 38, which is normally telling me like, hey, this is just a little blip on the radar and we should continue back up. And this was so tricky to play because it kept playing off support. And then today we finally broke down and broke below that 70 level. And as soon as we broke below 70, when I said I flipped back to 50-50, that was my cue right there to switch back to more of a 50-50 position. And you can see how we just retested that RSI right there. So if you draw in these lines, it's not an exact science, but it will give you a little extra edge. And you can go back in history and just see how these levels have really worked out. Sometimes we only get to the 50%, but say if pullbacks like this would drop down and bounce off the 38 level and go back up, that would tell you that it's not a full-on trend change. So I hope that's helpful for that particular trade. Okay, so let's move on to the S&P 500 and we'll just talk about the story of the week a little bit as we see it through the chart. So we had a gap down open on Monday. That was on Scott Bessent on an interview on Sunday afternoon saying that the US isn't going to cut spending and it's going to grow its way out via growing GDP. So we opened lower and the market shook it off and rallied up. We had a bit of a neutral day on Tuesday. And then on Wednesday, we saw that first negative reaction when there was that bad 20-year bond auction. So those were the first cracks starting to form, then a neutral day again on Thursday. And today we opened notably lower. So that's into that 200 daily moving average support right there, which we said is our first line of support. And what's notable is that we rallied all the way back up to close that gap at 5,831. And then we were near the top of that candle, and the last hour of the day is when we saw that sell-off, that weakness come in, and that's usually pros selling or buying into the close of the day. And the close of the day can often tell you a lot about what's going to happen the next day or the next week. So your question most likely is, well, what's going to happen next? And we still do have a bit of a gap to fill down below, which is at that 5,693 level right here. So I would see that and this volume cluster just below as our next area of support. If the market continues to get rattled by news next week, anything below that, and it's a bit of open air all the way to this gap fill at 5,300. So things would have to go really bad for us to get to that 5,300 level, but we have a trigger. Remember what I said a couple of weeks ago. If we don't break the low from this Wednesday, May 7th low, then we are most likely going to keep continuing on up to all-time highs. If we break this low, then I anticipate touching some of these levels or maybe even printing a lower low before a more meaningful recovery. So keep this line marked up at 5,575, 5,580 as a key trigger. If that swing low is broken, it would be bad for markets. But right now, I'm anticipating either next week we grind around and move away, or maybe we test this gap fill here at the 5690 level. If we look briefly at the NASDAQ, and I'll just turn off my GAN indicator real quick. So same thing on the NASDAQ. We opened lower and then closed the gap fill and then sold off, but a little less on the NASDAQ. And you can see we are a far ways away from that 200 DMA on the NASDAQ. So this is telling you that there's relative strength in the tech names. But we still do have that bigger gap fill just like we do on the S&P 500, which is right around the 200 DMA for the NASDAQ. So if we close that, that would actually be nice to see that gap closed, and then we could bounce away with more strength. And we would obviously close that matching gap on the S&P 500, maybe drop a little bit lower there since there's been more strength in these names. Okay, we haven't looked at this in a couple of weeks, but I want to look at SMH, the semiconductors ETF, because we had that big gap up and semiconductors really helped get the broader indices above resistance a couple of weeks ago. And now we have back tested that 200 DMA and closed back right kind of on it. But this sector has rallied, but it also feels like it's a bit out of steam. We've printed this mean reversion dot at almost 2 standard deviations overbought on the daily, which is quite high on the daily. And then we've had this very clean uptrending support on the daily RSI that broke down, which doesn't mean things are going to crash immediately, but it's telling you that some momentum is coming out of the trade, and the RSI will most likely reset to neutral a bit, and the price action will most likely also drift downward. So we've got a gap here as well on SMH, and if you go over to NVDA, you can see a very similar chart, and NVIDIA's been a bit stronger than the broader semiconductor space, and you can see that NVIDIA hasn't broken support on the daily uptrend of the RSI yet. So this could bounce next week and go a bit higher, but eventually it will break through. And that's always your first indicator, like we looked at with Bitcoin and other charts, that momentum is coming out of a move. And it might consolidate for quite some time before it corrects, but some kind of correction is due for a name like this when you see the daily RSI this high and into this support, and also mean reversion. And the same thing goes for TSM. I actually unloaded a little bit of my TSM here. You know, if this was 2023, 2024, I would just hold it and ride it out. But because things have been volatile and because we broke this daily uptrend on the RSI, I lightened my TSM bag a little bit. I know we have this gap fill here, which is also at the 50%. And so I have a limit order set at $180. So I'm going to see if that fills as we cool off a little bit. And if we drop anywhere below that and don't break this swing low right here at 170, I would still be layering into TSM to reaccumulate my bag from what I sold right there. Also worth noting on TSM, just like with the others, mean reversion is definitely extended compared to what we normally see on this stock. Okay, we'll go faster through some of the others. We have the US dollar, which is continuing to break down, and our anticipation is for the US dollar to continue being weak because that's what this administration wants, to make US exports more attractive, and also with all the instability that's going on with US treasuries, that also has an impact on the US dollar. If we look at gold really quickly, you can see how it bounced towards the end of the week as the uncertainty came into the market. So this is very much inversely correlated to stocks. So when stocks are selling off, money is piling into gold as a hedge. We just broke above the 50% level, so that would be the stronger half of this consolidation range, but we're also into this downtrending resistance right here. So I'm just using this as an early indicator that if this breaks, gold is most likely heading higher, and you can just set an alert to these indicator lines. So if you click on them, go up here to alerts, price crossing the line once per bar or whatever your preference is, and you hit create, and then that alert will pop up on TradingView for you. You could argue that maybe this is a bit of a bull flag pattern, or you could even draw like a little bit of a wedge. I mean, I guess we have 3 touch points here if you count these 2 down here. So this is just a consolidation pattern. If this is a wedge instead of a bull flag, it's a little bit more uncertain on which way it's going to break. But I would anticipate if things settle in the market and stocks keep rallying, gold is going to keep breaking down. I feel like Captain Obvious over here. Okay, looking quickly over to natural gas. It has been chopping around this week. It was very profitable at the start of the week and then bounced back up and has been consolidating in a bit of indecision. The macro backdrop and seasonality with lower demand and warmer temperatures in northern parts of the hemisphere has more stacked on the favor of this continuing to sell off. Now, just to recap why we got into natural gas, there was this head and shoulders pattern off the top and neckline. You can see our price target here at 257. And then now it appears that an even bigger head and shoulders could be forming. So if we move down to this price target, but the price target for this bigger head and shoulders is so unrealistic at 86 cents. You haven't seen prices like that on natural gas since like 95 or something. It doesn't make sense to me. But anyway, I'm just trying to play this out to here. And I've been layering out a little bit on the way because I'm in a leveraged ETF called KOLD. So even these small moves are quite profitable. This dip down here, this was like a 25% gain on Monday. So I took a little bit off the top here. And then this was like a 27% pullback in cold. And then you got some of it back. So it's all over the place. It can be volatile. You know, definitely have your stop losses in play if you're working with a leveraged ETF like that, and keep your eye on the macro backdrop. Okay, moving into Bitcoin on the weekly, and you can see that we rallied all the way up to 112,000 and have now settled back into the middle of the range with that weakness today. So keep your eyes on this on Sunday night to see where that weekly candle closes. It would be nice to see it close more in the top part of the range. As we recapped on Monday, Bitcoin generally doesn't run up more than 6 to 8 weeks in a row. And we are now on week 7. So if we hit week 8 next week, where I also have this seasonal date set, and this is 120 days from our previous all-time high on inauguration day. Those seasonal dates can often mark a trend change. That doesn't mean Bitcoin's going to crash. It could just be some consolidation and cooling off and coiling for the next move. So watch the weekly here. The other warning, I just want to recap so everybody is aware of it, and we covered this on Monday as well, but I think it's worth saying again, is that on the weekly, we have a very large bearish divergence. So bearish divergence is when the price is printing higher highs, but the RSI is printing lower highs. So once we intersect this line, which could happen next week already if we have that impulsive break to 120,000. So I've got my price marked there at 120,000. The other line I've had marked for the longest time is this 113,000, which we were just a little bit shy of at 112. But if we hit that next week and we rally into this line, the question is going to be, do we break through or do we reject away from it? And if we reject away from this downtrending resistance on the weekly RSI, even though the picture looks very rosy in terms of the macro backdrop, it is a sign to keep your head out the window and be cautious because there may be something coming to cause a bit bigger correction. However, I'm hopeful that maybe we just consolidate, or even on this next move, we don't get up to that line, we consolidate, and then we have an explosive move through. If we have a decisive move through on the weekly RSI, then that would be your sign that we're entering the so-called banana zone of the bull run. Yes, this is real investing in finance. We are professionals who call it the banana zone. Okay, moving into the daily, and you can see from that 112,000, we had that rejection candle today. New candle just opened and it's starting to get some positive momentum. So I would love to see that continue on up and bring some strength back into the Bitcoin market. But if we're trying to identify strength and resistance on the short term, we can just draw little support lines, little uptrending support lines. And I have my TIA Gann swing indicator turned on because it follows the rules of Gann swing analysis. And when you have two wicks that are very similar here, there are specific rules on which one you count and why. So when we're drawing support, we want to take this wick right here, and then we draw our uptrending support like that. And you can see how we have 3 touch points, so it's a valid trend line. And I'm just going to make that yellow so we can see it a little bit better. So just for the near term trend, as well as we looked at with like daily RSI and stuff, if a trend like this breaks down, it doesn't mean that there's going to be a huge correction right away, but some momentum is coming out of the move and it's not continuing at the same clip that you've seen right here. If we go into the 4 hour, you can see that same rejection here and the sell signal that we're getting, but we are finding good support here on the outside of the middle cloud. If you have the double cloud set up, you will know that often this provides a lot of support, and once we break into it and stay in it, it can kind of get sucked into the middle cloud and lose momentum, and then if it eventually breaks through to the lower third of the cloud, that's your sign that it's really going to be correcting a bit longer. But I like this support we're finding here. If you need a demo on setting this up, go to the trading education video. I have it in there. The good things about this correction is not only this support that we're finding here, but that we're finding support at these previous peaks at around 107,000. And we haven't broken below this previous range, which is, let's just say 105,000 for round numbers. So I would love to see support here. If we drop down this uptrending resistance line, I would like to see support played on that. If we maybe wick through, because you can have little wicks and that's okay, and we get support at that 105,000, that's the lowest I would want to see a correction for near-term support. Anything below that would signal to me that we're most likely going to test this $98,000 number, and we might find some intermediate, like psychological support at that 100,000 round number, but most likely we would hit this. And generally looking at this market structure here, I would not want to see anything on a bigger correction break below this $92,000 level right here. I've heard people on X talk about the mid 80s or the high 70s again, and I'm sorry, but those people just don't know market structure and TA. If we break these swing bottoms here, that would signal a far bigger correction. We'd be below the 200 DMA. There would be substantial weakness in markets. And this price action would be the least of your problems. You would want to be sold out of all your Bitcoin proxies, probably hedging your stocks. There would be something happening in markets to really cause this to break down. And our thesis of the bull run being on would have to be reevaluated. So watch those key levels below at 105,000 being your first trigger, then that 98,000. And honestly, given the strength we've seen, I'm not anticipating anything below that 98,000 right now. But again, 92,000 is kind of the line in the sand, so to speak. Okay, moving on to Solana, and you can see that Solana has been a little bit weaker. I mean, broadly speaking, if we zoom way out from our all-time high, which is up here at 300, we're still not above the 50% level. So we've been saying that $195 50% level, and just so you can see that previous all-time high there, that's our major resistance overhead. We did get through the 200-day moving average, which was a good sign, but then we had a sharp correction back below it, and we're moving back into the center cloud on the 4 hour. So definitely much more weakness in Solana. I last night thought this was a more genuine breakout because we were really consolidating under the 200 DMA, like this one we shot through and then quickly rejected below. We were building up steam, and I thought this was a genuine move, but with the broader market sell-off, we broke back below, retested the 200 DMA, and have continued away from there. If we just draw some fib levels for this entire range, so we had been drawing them here, but now we have to take this peak down to the trough right here, and this just gives us some support and resistance. And wouldn't you know, we always talk about the 50% level. I didn't draw this beforehand, but we're finding support right now at the 50% level. So this is actually making me want to get into a perp right now, a perp long. And I love trade setups like this because you just have such clear invalidation. You can enter your long, and you know that if we break below the 50% and say break this last wick right here, that we have more downside price action ahead of us. And the other thing that's great about fib levels, you know, we just drew this, and you can see how this 50% has just played support and resistance for all these candle wicks here. And you'll see, you know, it wicks through a little bit, but it's generally support. And you also see how the 618 and the 382 level here provide support and resistance. So Fib tool is a great one to use. The 50% level is my most used tool in analyzing ranges, followed by the 618 and the 382. This can really help you predict what's going to happen next. And you guys might be watching this video tomorrow on Saturday, and you can tell me if Solana bounced away from this 173.94 50% level and rose higher from here. In terms of a prediction of what's going to happen, I think that if Bitcoin rallies to that $120,000, we are going to test this 195 easily and hopefully break through. If we rally up there, my hope would be that Solana really gets some strength and breaks through the 50% level, back tests it for support, and then we bounce away from there. If Bitcoin breaks down, the support we have below is obviously the bottom of this range at the 159.50 level. And below that, the tops of this range at $157. There is still a fair bit of liquidity down there, so just look out for this zone down below. Okay, going over to MicroStrategy, and you can see how we were just hitting that resistance at that $420 level, and you can see how that lines up with some past peaks. So again, it's kind of a zone, but you can see that general resistance coming in there. With the momentum in Bitcoin, we said this already, but this should have continued higher, but Michael Saylor was most likely hitting the ATM, and then we had those class action lawsuit news. And today, with the market weakness, this broke down below the bottom of the range. And the good thing about ranges like this is that you can set alerts right at the bottom of this range. And as soon as that triggers, if you are just day trading or doing anything like that, that could be a signal to you to get out because there's most likely more downside. You can see how we also broke into the center cloud. And so now the question is, where are we going to find support? And we did hit our first strong support level today, exactly, which is at that $370 level. And you can see how these past peaks here, these past little wicks down, like anywhere where a big wick comes and finds support, that's how I'm identifying these levels. And you can see how price action just comes back to them time and time again. Our next major support down below is at $343, let's say to $345, these past peaks right here. So this would be the lowest I would want to see MicroStrategy go. Anywhere below this would really be breaking down market structure, much like we talked about with Bitcoin dropping below that $92,000 level. So let's see next week if this holds. If Tesla rallies up to that $360 level, and maybe we come down here to this $350 at these peaks, will drop just below that 1-to-1 parity. And then this could bounce away, and that could be that impetus for the pair trade. But there's just a bit of weakness in MicroStrategy right now. The one thing that is telling me that this support may well hold next week is looking at our daily RSI uptrend. So we have this daily RSI uptrend drawn, and we just got our third touch point. And since we haven't printed the next day yet to see if it's going to bounce away or if this is going to break through, we don't have clarity on this yet, but let me just make it a little bigger for you. So what we want to see on Monday, watch this uptrend, and what does the MicroStrategy price action do? If we break away like this, then that's a great sign that this is going to hold and we have higher prices incoming for MicroStrategy. If we break through like that, then that's a sign to you that we're going to see some lower prices, and then we'll find support in the RSI somewhere else and we'll have to disregard this trend line. Okay, moving on to Tesla on the daily time frame, and you can see we've just been consolidating around this range, around the $340 to $350 level. And in the past, we've actually also consolidated around this range. And overhead, our next resistance would be at that $365. So I was anticipating a move into this before we rejected, but with the broader market weakness, we want to see what happens. Our support just below is at 325, which was really important for us to break through. So that's the first thing I'm looking at. Then we have the 315 and the psychological $300 level. So I wouldn't want to see Tesla break below this. If we do correct, that's where the 200 DMA is. What's also playing in the favor of MicroStrategy rallying next week and this potentially correcting is that our daily RSI uptrend on Tesla, like MicroStrategy was into the daily uptrend, Tesla is not there yet. So it's got a bit to go. If we correct, we could hit this and bounce away and then have that RSI blow off top and then break down below it. Remember, that's your sign that the move is going to be cooling off for a while, and not everything runs up indefinitely, you know? So once we get into one of those cool off periods, maybe that is time to be in MicroStrategy again or to swap into another asset if you are trading in a tax-free account. Okay, going over to Hood really quickly on the daily, and with the broader market pulling back, Hood actually fared pretty darn well. It's still finding a bit of trouble here at breaking the all-time highs. We got right to all-time highs. And also we have level 6 here on the profit-taking model. We did a detailed dive on how these price and time extensions work on Monday. So if you're interested in that, go back to that. I was watching it mid this week and I thought, hey, if these all-time highs break, I'm really targeting along at $83, and I would have probably gone in on some call options for that. But now we are struggling here a little bit. There's some weakness in the broader market. I'll turn off profit taking really quickly just so we can see a clean version of the chart. And if we bring up RSI, we had this really steep daily uptrending support on the RSI that just broke through. Our mean reversion is fairly spiked. So I'm wondering if Hood just needs to cool off and correct a little bit. I could see us going down to that like low $50 level and then bouncing away from there. So that support is coming in at $56. And then our next support below that would be at $51 right here at these previous tops. I wouldn't want to see anything really below, $50 to maintain strength, and just watch that price action that it also mirrors the speed of the previous uptrend. So this line right here, recapping from Monday, it's just taking the trajectory and price increase of that uptrend right there. And as we're moving into later cycle, if this price action was to correct and not move up as quickly, that's just telling you that the trend is not as strong and it can't be trusted as much. In an ideal world, we don't intersect this trend line and we move up to this price target before October of 2025. Ideally, we would hit this price target sometime in midsummer, like around July, and that would be indicating to you strength in the trend. And beyond that, it just depends on what's happening in the crypto market. If the crypto market is having a blow off top and everybody's euphoric, then I would look at some of these higher price targets. Like I had one drawn in at $109, level 8 on profit taking is at $115. But that's a conversation for another time, one step at a time right now. Are we either going to break through and hit that level really quickly, or are we going to see a bit of consolidation, test those lower levels, and then break away from there? Those are the two paths forward on Hood. If you're not in it, look for that $56 or that even $50 number for a bounce away from there if you want to play it. If you are holding it, I mean, it's not a huge correction to get down there, so really your call, but those are the two paths forward I'm seeing for Hood. Okay, moving on to Deckers, the one I mentioned at the beginning of the video. So earlier in the year, they had this breakdown on earnings where Nike was taking some market share away from them, and they also had some manufacturing issues. So that got us into the 200 DMA. And then it broke down more on all the tariff stuff, because even though they don't manufacture a ton in China, they have a meaningful enough amount, and they also manufacture in other places overseas. So we had this bottoming pattern with our price target at 136 and change, and we couldn't hit that. We were into this resistance line at 131, and I'm just pulling that from these past support areas from back in 2024 and gap ups. Okay, so just to give you guys an idea of how I analyze this, we had this clear resistance overhead, and then I had drawn in a support zone. And if you were just looking at the daily, you would draw this in right here. But I like to go into the 4 hours, so we see the after hours action, and you could have that as a support zone, but I actually had it drawn a little tighter right against these candles and this wick down right here. And as we broke through after hours here, this was on Wednesday, I was like, nah, this is giving me a bit of pause. It's like really feeling weak against this. And I went into the daily RSI to see what was happening. And on the daily RSI on Wednesday into Thursday, we broke below and we couldn't get back above the daily RSI. And I was already thinking, hey, we didn't hit this price target. This is moving a lot slower than a lot of the other stocks I'm tracking. And I had a substantial amount in the trade. So I was like, I would really like to put this capital to work somewhere else. So all those things were playing together like, hey, I still believe in this stock long term. I'll just look at it in a few months after the crypto names and Bitcoin proxies have run. So I got out of my position, and I also knew earnings was coming up, but I did not expect this violent reaction from earnings. I mean, it dropped almost 25% and back into this very strong support at $94, which you can see if we go back are these previous peaks back here and where we bounced on that ultimate tariff correction low. So my plan with Deckers was to not get back into it for a while. But because of this outsized drop and being back at these lows and getting back into support, that made me want to get back into it. So I entered back in with 2/3 of my position and saying, hey, I'm just going to ride this up. Even if it doesn't move as quickly, it seems like this gap will get filled back up to $122 because the reaction was outsized. They beat on earnings. They are just seeing a little bit more market share go the way of Nike. And Hoka brand growth slowed to 10%. And I think analysts wanted it like 12% year on year. But overall, the brand is still growing. They have projections, I think, for $150 million of added expenses this year due to tariffs, but they're negotiating with their factories to eat some of that cost and then do incremental product price increases to put some of that on consumers. So all in all, it felt like an overreaction. I think the reason for the pullback was mostly because they withheld forward guidance for 2026. They said right now the landscape is just a bit too uncertain. We don't know what's going to happen and we'll have to update later. So that macro backdrop combined with being into support made me get back into this. Yes, we might still go a few bucks lower, but I got in the $96 range. So looking at all that, it was enough for me to take a position. Even if this isn't the ultimate low, it just felt like such an overreaction. And we'll see where this settles out in the next couple of weeks and what our RSI does. And eventually we'll get another trend line to draw underneath for support. Okay, so that's it for the charts. I really wanted to get into all of the Bitcoin proxies and treasury plays, but this video is already getting way too long. In terms of the next video on Monday, it is a holiday in the US and markets will be closed. So let me know, do you want me to do a trading education video on Monday? I've been wanting to do one on mean reversion and selling covered calls, so I could do that on Monday. Or I could save the video for after the market close on Tuesday to give an update on markets and a forecast for the week ahead. Let me know your preference in the comments below, and whichever one gets more love, that's what I'm going to proceed with. In terms of just the outlook for next week, expect more volatility. I have a keen eye on the semiconductor space because I am seeing the RSI on all those charts break down. It is looking a bit toppy. We have that gap fill on the semiconductors. I don't know what's going to cause the weakness in that sector specifically, but it feels like it has a bit more correction in store Bitcoin, I'm looking at that impulsive move up to 120K still, maybe over the next week, 10 days, and then expecting some consolidation. Watch that underside support that we looked at. Anyway, that's it for now. Wishing you all a lovely weekend, and I'll see you next week. Bye for now.